Hi, Shikhar.
Hi, Shilpa. Good afternoon.
Good afternoon.
You're not okay. One second. Yeah, can you once say something? I just want to check the mic.
Yeah, hi, I'm Shilpa from Insurance Samadhan.
Yeah, hi. Am I audible to you clearly, Shilpa?
Yes, Shikhar, you're okay.
Yeah, perfect. So yeah, good afternoon, everyone. Let's begin with the second knowledge session for our shelf community. The topic for today is how to choose the right insurance policy. And our keynote speaker today with us is welcome Ms. Shilpa Arora. She's a co-founder CEO of Insurance Samadhan. And to give you guys a little context, she just recently got featured on Shark Tank. And Insurance Samadhan is the perfect place and the one-stop solution for all your grievances related to insurance, claim related, or be it any settlement related. So yeah, let's begin with the session, Shilpa. The floor is yours. You may please continue.
Thank you, Shikhar, and thanks everyone who have joined the session. I am Shilpa. I am the co-founder and chief operating officer at Insurance Samadhan. Insurance Samadhan is primarily helping the policyholder with their problems of mis-selling of insurance policy or frauds, or there can be a claim rejection, claim delay, or short settlement, which is very common with health insurance policies. So we are primarily helping all the policyholders. And we often get this question, which Shikhar has asked me to conduct this session, that how to choose the right insurance policy, because why the claim gets rejected or why there is mis-selling, because somewhere we are not making a right choice and later we regret that this thing has happened with us. So to start with, first of first of all, we all need to understand what an insurance policy is. Most of the people are getting confused that insurance policy is an investment product and will give you a lot of return, which is not true. For investment, you have various options. You can have an FD, you can have a mutual fund, shares, whatever. But insurance is not an investment product if you are looking at higher returns. So, what is insurance policy? So, insurance policy is basically a risk mitigation tool that is available to you. When we talk about risk mitigation, so what are the risks that are associated? It can be an early living too short or living too long. So both are considered as risk. Um when I'm talking about living, living too short, is that in the peak of the responsibility phase of our family, if a death happens, that is living too short. Living too long means the retirement part, where we are not earning. We are earning till the age of 60 for most of the salaried class. Businessmen may continue to earn, but we need to plan like 60 and then uh, the retirement plan. Also, the life expectancy is increasing, and now we do not have too much of social support in terms of government, pension and all. So we need to plan our retirement also, because after 60, the life expectancy in metros is increasing because we have good medical facilities. The average life expectancy is 72. So 12 years, even if you take when you are not earning, you need to plan that. And you also have to consider inflation as a part of it. So most of us are not doing retirement because that is not important to us. But yes, that can be considered. You can go via mutual fund. You can also have an insurance policy, or you can have a pension plan by the government, NPS. That is also available for you. The advantage with an insurance policy when we are planning retirement is that you can only withdraw one third of the money at maturity. Rest will only continue as pension. So that is a security that even if I have an emergency, or at that age my children are asking for money for whatever reason, and I want to give them emotionally, I do not have that facility. Two-third will always be utilized as a pension, you know, uh, to give you pension, you cannot withdraw. So that is safety if you buy an insurance policy for retirement. So this is a small area. Now let us talk about the real thing. Why we buy insurance is to cover the risk. Now, what are the major kind of risk that we have to consider while choosing an insurance policy or while planning an insurance policy? Is first is you should have a term insurance. Uh, what is term insurance? Term insurance is primarily used during the earning years. So if I am say earning 1 lakh a month, I need to have at least 10 to 20 times based on my age the term insurance. So that is the minimum that you should have. Why have a term plan? Because I have my responsibility towards my family. If something happens to me, this 1 lakh is not coming, and the house expenses are built around this 1 lakh rupees that I'm getting into the house. So even if I am not there, my family is taken care. Most of us do not like to buy term insurance because there is no return in the term insurance. But please understand, this is a very low cost insurance which provides protection to your family in your absence, for which we buy insurance. The other thing which is important to cover is any loan, like a home loan, car loan that you have taken, because if something happens to you, this is a risk. This we have seen a lot in COVID times, where people have not taken the insurance to cover their house. And even if they have taken the insurance to cover the risk, they have not taken care of the proposal form. So a lot of deaths happened in COVID. And generally, we don't look at the policy being offered by bank. So what we realized at Insurance Samadhan was that the product that was sold to most of the people in coverage of home loan were covering only critical illness, disability, and accidental death. So when we are talking about critical illness, there is a definition of 10 to 15 diseases that will be covered. So COVID was not part of that. Also, the natural death was not covered. So when we are buying an insurance, we need to ensure that we understand the product. Please spend some time to understand how the product is, and just do not rely on what the person is saying. I think the current generation can go to the net and check for themselves what are the kind of coverages. So this was a major flaw that we saw at the time of COVID deaths, that they had to let go their homes because that coverage was not right. So this is still happening in home loan, that they give you a critical illness, they give you disability, and they give you accident. And natural death is not covered, or any other death is not covered. So that is the major
So yeah, what basically like as our audience is fairly young and they are just getting started with the working professional lifestyle, right? So I guess this would be the right time for our audience to buy a term insurance for themselves and secure their family, or like is it otherwise something?
yes. So, first thing, you need to have a term insurance, because term insurance covers your, in case of early death, covers that risk of, the income that is required to support the family. So even if I'm not there, my family has that money to run the expenses. So that is a term insurance. Also, these younger people, will definitely go for buying their homes in future. So just take care when you are buying a when you're taking a home loan, please read the policy, because there is a problem in the market which you need to understand and take a right decision. So after term, you can also look at health insurance. Now, I think after COVID, people have understood the importance of having an health insurance. The recent study suggests that a base policy of about 5 lakh is good enough. So you can have 5 lakhs, but I would always say that take the maximum cover. You can take 5 lakh base policy, and there are top up options also available. You can go up to 1 CR in top up. So to explain that, base policy means that suppose you are taking the 5 lakh policy, so 5 lakh is the coverage in the policy. Top up means that after consumption of this 5 lakh, that policy gets activated. So if you have already consumed 5 lakh, and then suppose at the second time of this thing, then you can use this top up policy. So So that saves a lot of money for you. If you go for a base policy, actual it is very costly. So you can take a 5 lakh of base policy and you can top up. You can have a top up which is fairly reasonable to buy, even if you buy 1 CR or 50 lakhs. So why I'm saying that you should buy insurance early and you should buy as much as you can, because once you have a problem like a lifestyle disease, diabetes, hypertension, the cost increases, and also the insurance companies have their reservation in giving insurance to you. So it's best to have a proper plan in insurance. Then in life insurance, there are other all other types of plans are called as endowment plans, which promises you a lot of return. Generally, you can expect a return of 4 to 6 that in insurance policy. So as I said, it's a risk mitigation. You can buy a child plan, or you can buy a plan based on the lifestyle, life stage that you want to cover. But generally, term insurance and health insurance are primarily which primary need which you must have as soon as you start the career. So this is about health and all. Now, first question is, as I said, do not rely on the insurance advisor or the financial advisor. Please do research, ask questions. In India, what we have seen is that people do not fill their proposal forms, and that is a cause of rejection and problems in the later stage when the claim arrives. So please do fill your proposal form, which means declare your actual occupation, declare all the health conditions that you have, declare your salary also, because that has to be correctly declared. These are reason of claim rejection in the future. We don't take care of occupation, we don't take care of the income, because insurance can be bought as a multiple of income only. So if you are declaring too much and if later it is discovered you were not earning that much, then the claim can get rejected. These are little things that we must take care. That proposals to the insurance advisor and being told that, okay, you fill, I'm just signing. Ensure that you fill it well. Even if you're giving to the advisor, once you get the insurance policy, please read it. Please read the proposal form at least, because by law, proposal form is the basis of the insurance contract. So whenever an event will happen, the company will always refer to the proposal form, and they can deny your claim, deny the benefits if there is any error in the proposal form.
So, yeah, in your opinion,
Uh,
basically, uh, in today's scenario, what would be the ideal case to buy an insurance policy, be it via an agent or some online portal or any website, directly from the website of the company?
so I think you can buy from website also, because that saves a commission part. Even IRDA is coming up with Bima Sugam, so that's a IRDA is launching, where you can compare insurance policy and you can buy insurance policy, and there the factor of commission is reduced or it is not there. So that is also one side. You can also compare like a Policy Bazaar or any aggregator and buy insurance. So products are good. It's just that you need to have the right information and you need to fill the proposal form.
Understood. Understood. So, yeah, as you talked about health insurance and term insurance, we fairly agree that, okay, the people who have just started working together, or say who have just started working, must be like it's important for them to apply for the term insurance and health insurance as well. But what about the college people, like people who are in their current final year or preparing to start their careers? How important for them is understanding to have an understanding about insurance, or be it they do they need to really apply what are the right things?
So insurance is only given if you have an income, because if you're buying a term insurance, there is a multiple of income. If at an early age it's 20 times, at a later age there is a multiple of 10. So as I said, in the proposal form you have to mention income. For students, they may not offer a term policy because you are not earning, but they can offer you endowment where the proposer will be the parent who is the earning member. So basically, insurance is a protection tool, so not an investment tool. So you, for the college students, student, it is good to be aware and understand at home that whether the family is covered with adequate insurance. Like you have a health insurance, do you have a term insurance for the main earning member? In the health insurance, also one point I would like to clarify is that when you're buying an insurance, please look at the room rent capping in the product because especially in metros, the cost of hospitalization and the room rent is really high. So generally, there is a 1% room rent capping on the policy. Try to buy a policy which does not have a room rent capping, because what happens is that if you say get into Medanta or Apollo, where the room is 10 lakhs and your policy is 5 lakhs, then you will only get a benefit of, you have to pay about 50% of your treatment from your pocket. So ideally, you should look at a product which do not have a room rent capping in the policy.
Interesting. Yeah, that this like yeah, this information really helps for a lot of our audience, and these are the
Yeah,
nuances which we get to know when we talk from an industry expert itself. Because yeah, we are fairly young people who are just starting their careers, and for them to understand these things about insurance, about taxes, is really important. So similarly, on that
yes,
note,
you said
we have
capping.
yeah.
I was saying in the PSU company which we trust the most, there is a room rent capping, and there is also a GIPSA tie-up wherein you cannot go for advanced surgery. So you have to be careful while choosing the product. Okay.
Okay. Yeah. So yeah, in that note, I was just about to ask you one more question, which is incoming from our community members. So, what part of your income should ideally be, say, invested in such policies so that you have a perfect balance between savings and also risk mitigation itself?
So ideally, as I said, cover yourself with the term plan. You can buy a multiple of 10 or multiple of 20. They are fairly uh, low cost. You can get about 4-5 thousand rupees annually at a young age for a 1 CR or 2 CR of coverage. So that is a must to have at the start itself, because that's a very small amount to pay. If you're going for endowment plans, yes, they are expensive, but actually you do not need those endowment plans. You need a term plan, simple.
Okay, interesting. So yeah, moving forward, we have a lot more questions incoming in our chat actually. So I'll just take it one by one, and if you have something in between to add, you please feel free to do. So so
Sure,
yeah,
sure.
one person has asked, so how should a person balance or transfer insurance given by their company while moving to another company? So these days, many companies, startups, companies offer insurance policies, but yeah, what
This
is
is
the
a very
procedure
good
to transfer it
question.
while they're switching?
There is no transfer facility. This is also very important to understand that most of us are on the corporate health insurance for ourselves, and when we leave the job, we do not have insurance. Also, it is important to understand that this health insurance we need more at the later stages of life. If we leave the company or we retire from the company, we will not have that cover, and we may not get that cover at that age because of our health condition, and also because the premiums becomes too high. So ideally, you should not rely on your corporate policy. You should have your individual policy in place, which you should regularly pay the premium. Have a base policy of 5 lakh from any of the insurer, and please continue that policy till the later stages of your life. Yes, at the time of claim, you can avail your claim from the corporate health insurance, while your individual policy will have a no claim bonus factor. So it will continue to increase. There will be an increase sum assured every year, which will help you in the later stages. So it's important to have an individual health insurance. Do not rely on your corporate health.
Okay, understood. Nice. Yeah, moving forward, there is one very specific questions which a person has asked. So the question is for is it better to go with insurance for which pays dividends after 10 years or so, like example like guaranteed income pro?
As I said that, do not look at insurance as an investment tool. You can buy it to protect, say, for a child plan, there are children plan wherein they assure you that whether you are there or not, at the time of education or at the time of marriage, you get certain sum assured along with bonuses. The returns in insurance policy, whether it is guaranteed or non-guaranteed, will range from 4 to 6% only. So it will not be very high. Please understand, insurance premium has three components. One is the expenses of the company, one is the commission, and then is the saving component. So already, if you're paying 1 lakh premium, there will be a deduction of 5 to 10,000 already, and 90,000 will be invested in government funds. So there is a regulation, you cannot go into the stock market unless you have a ULIP policy where you have the option to change. In the normal endowment policy, the money is invested in the government, so there are no high interest rate available. So do not expect returns from your insurance policy. Use it as a protection tool.
Got it. So yeah, let's get back to some basics itself. So what, according to you, in your opinion, will be the right questions for a person to ask while he is interacting with agent or say any company while buying a policy for himself? Like specifically 3 to 4 questions. What are the right ones?
So first of all, it's important to do your need analysis. I think those kind of calculators are available on the financial calculators are available on various website also, and also on the insurance sites as well. That how much insurance should you have? So first calculate what is the sum assured that you need to have, and accordingly, based on the amount of money that you can, the disposable money that you have for insurance, choose the product. So you can have, again, you can have term number one, then you can have a health insurance, and then if you have more money, then you can go for endowment to secure the life stage responsibilities like marriage, child, or whatever you, or future education, whatever you want to secure, you can do that. So it will entirely depends upon the requirement that you have, how much should be the cover. And why we say 10 to 20
Okay.
times, because we calculate it basis that if I get, my family get 1 CR at the rate of 8%, they would get about 8 lakhs uh, in the house, and from that 8 lakhs they will be able to run. So you have to do a back calculation of what will be the requirement of my house per month, and then accordingly buy a sum assured.
Understood. So yeah, there are a lot more questions incoming. So Simran from our community asks, does my credit score affect my insurance eligibility? So what's the take on it?
I could not get you clearly. There was a break.
Okay, 1 second. Just give me a minute.
Yeah.
Yeah. So yeah, one person asks, does my credit score affect the insurance capability or not? So what's the take on it? I hope I was clear right now.
Yeah, now clear. No, there is nothing like a credit score to buy insurance. It is primarily depending on your income, occupation, and the lifestyle that you
Okay,
have.
okay.
So you can buy
And
based.
also, while talking, like you told a lot of things about health insurance. So, are health insurance covering, which are available right now, are covering chronic disease, or there are any specific sort of insurances which cover specifically for chronic diseases itself?
There are products that are being designed for cancer, for diabetes, for people who already have diabetes or cancer and all. Then they have certain special. Otherwise, a general policy where we do not have any issues covers everything.
Okay, understood. Nice,
Mental health.
nice.
So IRD is taking a lot of steps on coverages.
Got it. So yeah, another question in the line. what should be the priority while picking up the insurance? Like, look it as an insurance only or an investment product as a tax saving product also, because yeah, there are a lot of tax benefits involved while you're buying up an insurance policy. So what should be the perspective of a person, if he should prioritize the tax saving part of it, or like the insurance policy, what sort of terms it has?
I would always say that insurance is a risk mitigation tool. So first and foremost, you have to secure your family. Tax benefit is given because it's in the country. If somebody dies or family goes, economically there is a burden on society. So that is why that tax benefit there in the insurance product. So primarily, insurance product should be viewed as a protection only, and you should prioritize your purchase of insurance basis protection.
Understood.
Tax will
And
follow. Tax
yeah,
will follow.
definitely,
Yeah.
definitely. So yeah, apart from that, and talking about health insurance a little more, so does health insurance covers OPDs and IPDs both, or only like the IPD version when you are admitted to a hospital itself?
So it depends on the product that you're choosing. There are products which covers OPD as well. So it will depend on your premium paying capacity. If you want an OPD cover, yes, that is also available. There are pocket expenses being covered because once the person is admitted in the hospital, there are other expenses also which are involved. So it depends on what you want to choose and what is the kind of premium you want to pay.
Okay, understood.
So for if you want to OPD cover, obviously the premium could increase.
Yeah, definitely, definitely. So, yeah, moving ahead with the session, like we talked about term insurance and health insurance majorly right till now. So, what, in your opinion, are other insurance policies which are available in the market apart from these two, which usually like benefit a lot of early young professionals who are starting their career, or even someone who is just about to start the career, be it in a final year college graduate? What should be an ideal like uh, policy which he should remember or he should learn about?
I did not speak about motor insurance because that's a mandate everyone has to have if they are driving a vehicle. You must also have an accidental insurance. It's a very economical kind of 300 400 rupees for a good sum assured at early age is also recommended because we are on road and we do not know what can happen. So accidental insurance covers accidental death, it covers disability, it also covers your leaves because you are not working, so they give you some weekly allowances also depending on the product that you choose. So that is also a very good product that you can buy.
Okay, so these are the two independent products basically, to be clear: accidental insurance and a health insurance or life insurance basically.
They are different products. So accidental is offered by these general insurance companies. Health insurance are offered by general insurance and health insurance companies as well. And in the health insurance also, you can buy accidental as a rider. In life
Okay,
insurance also, you can buy an accidental as a rider. You pay a little more premium and you have a rider which covers accidents as well.
okay. So yeah, as being young professionals, majorly our community members, there is one very interesting question which has came up. So what would happen if an insurance policy holders fail to make the required premium of the payment, like payment of the premium basically? Okay. And what if the person doesn't pay any premiums at all? So what are the effects he, like, or nuances he's gonna face?
Okay, so now IRDA has also introduced something called as a premium funding option, where you can take a loan and pay the premium to continue the benefit, which is also important. When I talk about life insurance, if you do not pay the premium, say after 3 years, then there is a surrender value. Either it's very less, 30% of whatever premium you have paid. But the other option which the company do not tell you is a reduced sum assured offer. So if you're not able to pay the premium, you can go to reduce sum assured, which means that your sum assured will be reduced in proportion to the number of premiums that you have paid. Okay, so if you had a 10 lakh policy, you paid three premiums, so maybe a 3 lakh kind of a reduction in the sum assured, and that sum assured is payable after the completion, after the maturity of the policy. So you can explore the option of reduced sum assured, which is generally not told and generally not offered, and you just get the surrender value, which means nothing, 30% of whatever premium you have paid. So it's a huge loss. So better to go for a reduced sum assured option if you're not able to pay the premium. But if you have not paid the first premium or the second premium, you get nothing. Everything is gone.
Got it. Got it. Understood. Nice.
And in
So
health
yeah.
insurance, I would say that the contract gets over. It is important to continue your health insurance, pay the premium. Uh, and one thing that, based on our experience, I would also like to say that do not quote your policy too frequently unless you have a very good benefit. Because if you continue your policy for 8 years, the claim become indisputable that the company has to pay the claims if you are sticking to one company. So ensure that if you have an insurance policy, because most of the people would come and tell you our policy is better, I am there, the relative will come and sell you, मेरे पास आ जाओ, स्टार हेल्थ आ जाओ, इधर आ जाओ, केयर पे आ जाओ. But do not, you can buy a new product, do not discontinue your benefit, because there is a waiting period
Okay.
in insurance policies like 2 to 3 years for certain diseases, problems. So you lose your waiting period, you lose that 8 years of indisputable thing. So ensure that you do not
Okay.
quote.
Okay. So yeah, one more question coming up right now.
One
So,
thing that I want to say,
sorry?
sorry, portability. One thing also I want to share is
Yeah,
that
yeah, yeah.
when you port, please fill the declaration form again yourself, because what we have seen in insurance Samadhan is that people port and they believe that okay, now from say Star Health I have moved to Care, the benefit will remain the same, I do not have to declare because it's a portability, but the claim will get rejected. If at that, when you're porting the policy and you had diabetes and you have not declared to the new company, then that claim will
Mm-hmm.
be rejected. So please ensure that you ensure that it is written that portability has been exercised in your policy, and also ensure that you have done the declaration again of your health to ensure that
So
claims.
basically, it's very important to be transparent while going for any policy or porting of any policy to another company itself.
Yeah, yeah.
Yeah.
Ensure that you declare, because people will say nothing will happen. You are moving from all the benefits will be there, but then declaration is important, and the word portability should be mentioned in your policy. Portability and the previous policy details should be mentioned. Otherwise, it becomes a problem in the future.
Okay. Understood. Understood. So yeah, coming up with another question. Like suppose for a person he spared out of some 50,000 from his salary to invest in insurance policies. So what should be a division in as per your opinion in health insurance, term insurance, or say automobile insurance included itself, every sort of.
So 50,000 is a very good amount at that young age. You can get a
Mhm.
very good term insurance for 7-8,000 rupees, which can cover you up to 2 to 5 CR. You can have a base policy of health insurance, and I said along with the base policy, have a top up policy also from the same company. So that should cost about 10,000 uh, for a family at a young age, your wife and say yourself. And if you have a young kid, it will be cheaper. Then you can have an endowment plan, or you can have a retirement plan also, because that is also important. The earlier you start saving, the better it is, because that compounding effect does the magic.
Okay, nice, nice. So seems like our community is very interested to know more about insurance Samadhan as well. So how did you guys started and how like basically what was the journey and how did Shark Tank happen and what was your journey after Shark Tank as well? So yeah, would love to know from you.
So, yeah. So, three of the co-founders, Deepak, me, and Sailesh, we were working with Max Life Insurance, and we were in the CP branch, and we had a lot of walk-in there, where people would come and complain that mis-selling has happened or a claim rejection has happened. So, I was a head of training there. So I was the one interacting with the customers, or Sally sir was also in the training. So he would also interact with the customers, and we realized that there is a problem which people, because of financial illiteracy, they have issues, and they have issues in representing their problem to the company. At one point of time, we met a crime branch inspector who came to our office, and his father was sold policy worth 60 lakhs. At best, he could do is to arrest that person who sold these policies to him, but that 60 lakhs was gone. So we started working with him, and within 3 months, we were able to get that 60 lakhs. And we then realized that people of that caliber are not able to fight for themselves. So they need that, the knowledge and the empowerment. So we all
Definitely.
quit our jobs and decided to start Insurance Samadhan. And once we are here, we have a lot of learning, and that is what I'm telling you more, like this
Yeah.
is what you should do, so that the claim is not rejected or mis-selling do not happen. So there is a problem. Help the customers represent rightly. So insurance companies are ready to settle the claim. They understand, they are there to pay the claim, but then the customer is not able to answer the questions properly. There are more emotions involved when we are communicating with the insurer than the facts. So if I know the rules and regulations of IRDA laid down for customer protection, I will be more empowered to answer the queries, and the insurance company then settle the claim. So we have a good settlement ratio. We we have 35% claim settlement ratio with us. If people file, 70% people get their claims. There may be a reason where we are not able, if a person is not disclosing his things properly. So he had a pre-existing disease and he's not telling us, and later it is discovered that he has pre-existing, then we cannot help. So if it is a genuine claim, then yes, we are able to help.
Understood. Understood. So,
And then
suppose,
is also very common.
yeah,
Yeah.
yeah, yeah, go ahead,
So
go ahead,
I
go
will
ahead.
also warn misspelling, because nowadays these crimes are happening where you will get a call from somebody saying that, do you have a lapse policy, or your father has a lapse policy, or your mother has a lapse policy. They will have all the details, and they'll ask you that, okay, you can get those premiums and you can get those bonus. You need to buy a new policy. So there is nothing like that provision that you can get money from the lapse policy. So do not indulge into those conditions. Also, when you're looking at loan, when you're searching on Google loan, something is happening that these telecallers get the information and they call you that you can get an interest free loan. So nothing
Yeah,
is
yeah.
interest.
All
Tell
of
you
us
an
got
insurance policy
these calls on a regular basis. Yeah.
on a regular basis, and we fell in trap. Okay, because the money is going to insurance company, so you do not think twice while paying that through that link to Bharti or whatever, whichever insurance company they are guiding you to. So there is nothing like an interest free loan. There is nothing like loan available on insurance, new insurance. There are loan available on the insurance policy, but not on the new insurance policy. So do not get in trap. Similarly, instead of FD, when your parents walk into the bank, they are sold insurance policy with higher returns. There cannot be a higher return on insurance policies. So word of caution: do not get into those traps.
Understood. So, yeah. So, talking more about insurance Samadhan now, what is the procedure if, say, as any of our community member needs help with insurance or needs help with settlement claim? How should he approach insurance Samadhan, and what is the procedure you guys follow to resolve all the
So you
queries?
can call us. You can call us. You can drop your lead on the website. There's a WhatsApp bot also available where you can send the information, and our people will call back and understand the problem. We also have a Polyfix app. Through the Polyfix app, you can directly upload your complaint, and it reaches the expert, and the expert will then connect with you to understand the problem that you are facing. We charge a registration fee of 500 just to ensure that there is a commitment at both the ends. You know, Otherwise,
Yeah,
we have seen, if
got
we
it.
don't charge, then people don't become serious about the thing.
Completely fair. Completely fair.
No.
Yeah.
So it's a
So, is
500
there a
registration
specific
fee, which
age
is
limit?
refundable. this fees is refundable if we do not solve the case. Once we solve the case, we charge 12% plus GST of the claim recovered.
Nice,
It's a
nice.
success fee based. Yeah.
Understood.
You
Yeah, definitely. Yeah, to apply for a, say, a query, or if any, I have any doubt related to my insurance or my parents' insurance, can kids apply to your portal so that they could also learn what policies their parents have indulged in, so that they have a perfect idea about, okay, what they're getting into?
Yeah, so in our app, which I told you, Qualifix app, you can also check the quality of the. There's a feature called quality of check the quality of your policy. You can upload the policy. The app will read the policy and will throw out questions to you, which are very critical to the policy. That this is what is declared in the policy. Is this right? If you have missed out
Okay.
on something, then there is an auto draft available on the app, which you can send to the insurance company and update that this information was missed. So that is check your quality feature. You can also upload your policy and keep in the vault. We are also coming up with this feature to make you understand which policy to buy. So we are not telling you the product or the company, but you can definitely in another 4 5 months we take, where a portfolio analysis will be done and a suggestion will be given to you how much term you should have, how much health insurance, and how much other what
Yeah. Understood. Understood. So, uh, Shilpa, I guess you are not really right now. There is some network issue happening at your end. Yeah, better, better, better. Am I audible to you? Yeah. So great. Our community got a really good, great insights from all the information which you provided us. And being an industry maestro from past 15, 20 years in the insurance field, we got some really cool insights about how a young person, or say a person who is just starting his career, should look, how he should look into insurance policies, and also not indulge in the perspective of that, okay, it's just for gaining returns and all. Firstly, you should like mitigate your personal risks itself. So yeah, it was great talking to you. It was a great session, and I hope we do frequent sessions for our community in the following years, coming years itself.
surely, surely. We will love to educate and create awareness about insurance.
Yeah, definitely.
Thank you so much, Shikha. And thank you, everyone in Chef community.
Yeah,
Thanks.
thank you so much, Shilpa. Thank you.
Okay, bye.
Bye bye, have a nice day.